Vietnam boosts economic ties with China and Russia. First quarter GDP surpasses expectations. Hello from Hanoi and welcome to Bizline, brought to you by VTV International. You're with me, Linh Hương. As usual, we start with several highlights in the economic scene for the past week. Vietnamese Party General Secretary Nguyễn Phú Trọng began an official visit to China on Tuesday at the invitation of Chinese Party General Secretary and President Xi Jinping. The two party leaders agreed to improve their comprehensive strategic cooperative partnership in various fields, such as trade and investment. In detail, both sides agreed to effectively implement side economic agreements and declared to set up joint working groups on infrastructure cooperation and monetary cooperation. Both leaders pledged to provide the most favorable conditions for investment flows between the two countries. Russian Prime Minister Dmitry Medvedev made his official visit to Vietnam this week at the invitation of his Vietnamese counterpart Nguyễn Tấn Dũng. At their talks on April 6th, they agreed to promote the Vietnam-Russia Comprehensive Strategic Partnership in terms of economics, investment, oil and gas, nuclear electricity, amongst others. Notably, they aim to soon sign the free trade agreement between the Eurasian Economic Union and Vietnam, which is hoped to raise Vietnam-Russia trade turnover to $10 billion by 2020. As part of its 37th session, the National Assembly Standing Committee discussed the draft state budget law on April 8th. The deputies agreed that while a budget deficit is allowed in local government, the law must be transparent enough to limit such a deficit. Only those localities with budgets exceeding the estimated revenue as well as repayment capacity are allowed to overspend. The National Assembly delegates also agreed to keep its reward system for exceeding budget revenues, which exists in the current law. Vietnam and the European Union have made great efforts to advance the signing of the EU-Vietnam Free Trade Agreement, or FTA, by mid-2015. The chairman of the European Parliament's International Trade Committee, Bernd Lange, made this statement at a press conference on Wednesday in Hanoi. Lange said that when the agreement is concluded, there will be great benefits to Vietnam's footwear, textile and agricultural exports. On the EU side, machinery, scooters and cars will be the major export products. Officials from the Ministry of Finance have raised concerns over the pressure to equitize state-owned enterprises in the next 9 months of this year. There are still 262 SOEs that need to be equitized during that period. According to the SOE equitization plan approved by the Prime Minister, 289 Vietnamese state-owned enterprises must be equitized in 2015. However, only 27 of them completed their IPOs in the first quarter. This means the State Capital Investment Corporation will have to list one enterprise each day from now until the end of the year in order to achieve the target. The General Department of Taxation reported that they managed to reduce 370 hours from tax procedures time last year and aim to cut another 45.5 hours more from this time this year. Addressing a conference on Monday, Minister of Finance Đinh Tiến Dũng added that while online tax declarations have improved significantly, the rate of online tax payments remains low at only 8.5%. The sector aims to increase this rate to 90% by this September. According to the latest report from Hanoi's Statistics Office, foreign direct investment inflows into Hanoi in the first quarter of 2015 was close to $168 million, with 74 projects, an increase of nearly 3 times compared to the same period last year. Around $150 million was disbursed, focusing on logistics and warehouse services, transportation and real estate. On the national scale, Ho Chi Minh City still remains as a leader in FDI attraction, with more than $540 million worth of FDI in new and existing projects. We have just reviewed last week's economic and business highlights. We continue with a discussion of Vietnam's GDP growth in the first quarter of 2015 in our crosstalk. Vietnam has witnessed a gradual economic recovery and an increasingly stable macroeconomy in the first quarter of 2015, with a GDP growth rate of 6.03%. This is the highest level recorded over the same period in the last 5 years. So what contributed to this GDP growth, and how do other economic figures reflect the health of the economy? What current challenges does the economy have to overcome in order to sustain this upward trend? You will find out the answers to these questions in our crosstalk this week with Mr. Sandeep Mahajan, lead economist from the World Bank. Before we talk, let's take a look at several important economic data released recently from the General Statistics Office. Vietnam recorded a GDP growth of 6.03% in the first quarter of 2015. This is the highest year-over-year increase in the last 5 years. Industrial production and construction contributed most significantly to this growth, with 2.82 percentage point, followed by services with 2.36 percentage point. The first quarter saw a strong recovery of manufacturing and processing industries, with a high growth of 9.51% compared to the same period last year. Vietnam's export turnover is estimated to reach $35.7 billion, an increase of 6.9%. Its import turnover reached $37.5 billion, up 16.3%. This means Vietnam incurred a trade deficit of $1.8 billion in the first quarter of 2015. Consumer Price Index, or CPI, during this period saw an increase of 0.74% against last year's first quarter. The surge was the lowest for the first quarter during the last 10 years. Well, Mr. Mahajan, thank you very much for agreeing to our interview today.
Thank you for having me.
First of all, the first quarter's GDP growth was 6.03%, which surpassed the government expectation of 5.6%. How do you think about this?
6.03% growth rate is pretty strong, and I think it surprised most people, not just the government, by how strong it was. Most projections that I had seen earlier range from 5.6% to 5.8% for the first quarter. And this was certainly higher than that.
The main contributor to this GDP growth was in the industrial sector. What's your take on the development of industrial production over this period?
Industrial sector grew by more than 8% in the first quarter, which is much stronger performance than what we had been seeing in the recent quarters. And this was largely led by the manufacturing sector. I think a number of factors help explain that. The confidence in the manufacturing sector has remained strong for the last 18-19 months. If you look at the Purchasing Manufacturers Index, the PMI, that's remained above the crucial 50-point mark since September 2013, which shows that manufacturers are optimistic about the future. They expect a growing economy. In addition to that, the input cost for manufacturers has been coming down. The cost of fuel, the cost of steel, and some other crucial commodity inputs have been coming down and helping on the production cost side, which has made the manufacturers more optimistic about the future.
How much is the contribution of the foreign direct investment to this national economic growth?
It's hard to say that how much of the FDI has provided the impetus to the first quarter GDP growth. Because we don't have the numbers for the first quarter FDI yet. But we do know that the interest of FDI in Vietnam remains strong. It was very strong in 2014, and our impression is that for the first quarter, it has remained strong as well. If you look at Samsung, if you look at the big companies, they are increasing they're expanding their production in Vietnam. They're bringing in more investment, which is creating more jobs and more export opportunities. Some of the existing big companies from Korea, from Taiwan, from Singapore, from Japan have been expanding business in Vietnam at a pretty rapid pace. When we discuss the business conditions in Vietnam with them, these companies like the business conditions in Vietnam. They find it favorable. They find the workforce to be disciplined and well-skilled, and they're quite keen to expand the business here.
Nội Bài industrial zone in the suburb of Hanoi is home to about 40 companies, mainly operating in the industrial sector. For the first 3 months of this year, production has witnessed an increase of about 12.5% compared to the same period last year. according to the general directors of the Nội Bài Development Corporation, also the owners of this industrial zone. This positive result is due to a wide range of factors.
I believe the confidence level of the consumer has come back a little, maybe due to the very stable inflation. Inflation is not high, and the petrol price is coming down. The bank borrowings also, the rates are coming down as well.
Meanwhile, manufacturing orders in this factory have also increased since the beginning of the year. According to one of the managers of this company, which specializes in precision machined components for several appliances and devices, investment funding is coming in at an increased rate compared to last year.
We are experiencing a growth of about 10% compared to the same quarters last year. Okay, the main reason I think is because of new investment. We see a lot of new investment come in, in this year. Okay, mostly from the traditional low-cost assembly markets like China, So many companies ship out from China and come into regions like Vietnam in this year. That's why we experience a very strong growth.
Despite very positive contributions from the industrial sector to the Q1 GDP, which now stands at 6.03%, the head of the Nội Bài industrial zone is not entirely optimistic about the data.
GDP numbers for 1 or 2 quarters are not the real solid indicators as such. But for local businessmen like us, for example, we do take these things very seriously, such as what the government is doing about the banking industry, the restructuring of the state-owned enterprises, how they handle the efficiency in the market, for example,
According to John Oh, the expansions of productions from companies in this industrial zone is largely dependent on the government making clear decisions on reforms that affect companies.
Now, besides the industrial sectors, what are the other contributors to this GDP growth?
I think the services sector has remained strong. The services sector grew by 5.8%. This was basically what the pace at which it has been growing in the last several quarters. So this doesn't explain the increase in growth, but it still explains why growth has remained strong. Agriculture sector at the same time grew at 2%, 2.5%. Which is, again, consistent with past performance. It doesn't explain the increase in growth. So if you look at why GDP growth in the first quarter has increased, that's mainly because of the manufacturing sector.
What policies have proven effective in helping Vietnam achieve this positive result?
Fiscal policy has been expansionary in the last few years. As the demand from the domestic private sector has softened, the fiscal policy is expanded to compensate for that. And what we see as a result is larger deficits and a buildup in public sector debt. But some of it was needed. There was a need for countercyclical fiscal policy to make sure that GDP growth does not drop too steeply. Monetary policy has also been accommodative. Interest rates are at historically low levels at the moment. The efficacy or how effective the monetary policy is, that's been affected a little bit by the conditions in the banking sector. The banking sector is not too willing to lend credit right now, which has an effect on the monetary policy.
So the government of Vietnam has been implementing a lot of reforms in terms of administrative procedures to improve the business and investment environment in Vietnam. Do you think this has been contributing to this GDP growth?
I think there have been a number of positive reforms which have contributed to the confidence of the private sector, of the manufacturing sector in particular. If you look at the details of Resolution 19, which targets very specifically the ease of filing taxes, the ease of dealing with customs and other administrative procedures that businesses face. These are all very positive moves. And then when we look at the modalities of the investment law and the enterprise law, which were modified last year, these all enabled businesses to perform better and increase the confidence levels.
Now, in the context of high GDP growth for the first quarter of 2015, Vietnam's consumer price index of CPI only increased by 0.74%, which is relatively low in the past 10 years. What does this tell us?
What this tells us is that the global conditions are such that commodity and food price levels are quite low. And the inflation in commodity prices and food prices is pretty low. And Vietnam imports these conditions. As a result, the food price inflation in Vietnam has been in single digits for a while, and it's actually now very low. 40% of the CPI basket is because of food, and that has a big impact. So the conditions, again, on the inflation side are quite benign globally, and Vietnam benefits from that.
For the first quarter of this year, positive economic data for Vietnam has been reflected both in the recent report of the General Statistics Office as well as the HSBC Manufacturing's PMI. The latest PMI shows that manufacturing in Vietnam has been continuously expanding for the last 19 months. Also, in a video phone interview with our VTV reporter, one of the authors of HSBC's PMI report made a positive predictions for this year's GDP.
The good news is that in the short term, both the deceleration of exports and the decline of tourism will not pose short-term risk to the country as the deficit remains small. We continue to expect credit to expand, and we expect GDP to accelerate to 6.1% this year from 6% last year.
Earlier last month, the Asian Development Bank also launched a report called the Asian Development Outlook 2015, which made predictions about key economic data for the region and several countries, including Vietnam. In the report, ADB forecast that Vietnam's growth would strengthen at a rate of 6.1% and 6.2% in 2015 and 2016, respectively.
Better economic performance in the major industrial economies, particularly the U.S., Vietnam's biggest export market, will spur exports, although this positive effect will be partly offset by slowing growth in the PRC. Vietnam is also expected to be a net beneficiary of lower global oil prices, which will increase disposable incomes and lower business costs.
Out of all the positive forecasts, the most optimistic of all comes from the Vietnam National Supervisory Commission, which is expecting this year national GDP to grow at 6.5%, much higher than the 6.2% originally predicted.
Now, going forward to Q2, what should the government do in terms of fiscal and monetary policies to sustain this growth?
I don't think big adjustments are needed yet, but there are challenges that the government will have to address in the medium term. I think there's been a healthy debate in National Assembly and other places about the rising public debt levels. Government's debt, or the public debt to GDP ratio, is in excess of 60% already. And rightly so, there's been concern expressed about that. Going forward, again, you can't have too disruptive change in the fiscal policy because it will affect economic growth. But over the medium term, there is certainly a need for fiscal consolidation to reduce the level of fiscal deficit, which has been the main contributor to the rising level of public debt. That would entail increasing the revenue collection. Revenue collection has been declining quite significantly in recent years, as well as curtailing recurrent expenditure, which has been rising pretty sharply. On the monetary policy side, I think the global conditions which have helped Vietnam keep inflation down are expected to persist for quite some time. So we don't see any big need for big shifts in the monetary policy in the coming months at least.
Many experts urge Vietnam to accelerate the structural reform, particularly the privatization of state-owned enterprises, to increase the role of private sector in the economy. What's your take on this?
I think the restructuring of these state-owned enterprises is an important reform agenda. Everybody talks about it. The government officials are definitely aware of it. And there has been some momentum building up in terms of equitizing the state-owned enterprises, improving their disclosure requirements, improving their corporate governance, and so on and so forth. These are all steps in the right direction. More needs to be done. The state-owned enterprises still play a very dominant role in the economy. They still account for 30% of GDP. To a large extent, they get some preferences such as access to land, access to credit, even access to government procurement, which puts the private companies at a disadvantage. So correcting these preferential treatments that the state-owned enterprises get and the private sector doesn't get is going to be important in the future to make sure that the private sector grows more strongly.
How would the global economic context affect Vietnam's economy in the months and in the few years to come?
Vietnam's economy is very closely linked to the global economy. Vietnam has very strong trade links with the global economy. The trade to GDP ratio is close to 180%. So what happens in the global economy has strong bearings on Vietnam. The main trading partners for Vietnam, the export markets, as we know, are the US, Japan, and EU. Luckily, in these markets, economic conditions are gradually improving, but they're still quite soft. We don't expect major improvements in economic growth in these markets. So I think it's going to be important for Vietnam to remain competitive. On the inflation side, again, Vietnam is benefiting from the stable inflationary environment globally. We expect the global environment to remain stable over the next 1 year at least, and Vietnam will benefit from that.
How would Vietnam's deeper integration into the global economy contribute to the national economic growth?
Well, global integration presents Vietnam the opportunity of serving a much larger market. Vietnam relatively is a smaller market, and this gives opportunity for Vietnamese firms and opens up much bigger markets for them. If you look at the TPP countries, and we don't know if TPP is actually going to happen this year or the next year. I think there's good momentum building up to it, but there's still some work cut out. There are 12 TPP countries. Vietnam is the lowest income among these. So you have all of a sudden economies such as the US, Australia, Japan, opening up their markets to Vietnamese exports. And this privileged access is only given to Vietnam amongst the lower middle income countries. There is no other lower middle income country which has that access. So this puts Vietnamese exporters at a big advantage, which they can avail of. There are certain conditions that will come with the TPP agreements, which will need reforms in the Vietnamese enterprise sector, in the Vietnamese services sector. There will be some conditions related to environment, to labor markets, but these are going to promote positive reforms to support Vietnamese exporters.
So could you tell us the World Bank's forecast for Vietnam's GDP growth for this year and next year?
We're still quite optimistic about growth prospects in Vietnam. Our projections for this year are 6 to 6.1% for 2015, rising gradually to 6.3% next year, and then 6.5% in 2017. The current account and the external balances in Vietnam are quite strong. And the export balance largely is either balanced or is in surplus. Strong remittances coming in, capital flows in form of FDI are strong. So we expect the current account to remain strong, to foreign exchange reserves to continue building up. I think as the economy picks up, the import growth will pick up. So the current account surplus will not be as strong as it is today. But overall, the external conditions will remain quite positive.
Well, Mr. Mahajan, thank you very much for spending your time with us today.
Thank you.
According to the latest report from the National Financial Supervisory Commission, thanks to stable economic growth and improved domestic production, Vietnam's GDP in 2015 can reach 6.5%. At the government meeting on April 1st, Prime Minister Nguyễn Tấn Dũng emphasized that the government is consistent and determined to stick to its macroeconomic stability policy. He urged relevant agencies to speed up the equitization of state-owned enterprises and fulfill the goal of equitizing 289 SOEs this year, which requires ministries, agencies, and localities to withdraw state capital from ineffective businesses. Other measures to bolster the private sector, especially domestic companies, will be implemented in the time to come to drive the economy forward. And that's all we have for this edition of Bizline. Thank you very much for being with us. You can just log on to btv4.vn or youtube.com/btv4go for other episodes of Bizline. And from our team here in Hanoi, goodbye for now.